Alright, imagine this. You and your friend both invested $10,000, but a year later, one of you is up 50% and the other barely made 5%. What went wrong? Was it the stocks, the ETFs, or the mutual funds? Look, we all want to grow our money, right? But figuring out where to put it feels like navigating a financial minefield. One wrong step, and boom, you're down thousands. That's why today, I'm going to break down the ultimate investment showdown. Stocks versus ETFs versus mutual funds. And by the end of this video, you'll not only understand the difference, you'll know exactly where to put more of your money for maximum growth. Let's find out. Look, here's the truth. Most people don't lose money in the market because they pick bad investments. They lose money because they panic. They let their emotions control their decisions. The market drops a little and boom, they sell at the worst possible time. Then when the market recovers and everyone else is making money, they're left with regret and a smaller bank account. We've all been there. Understanding how your brain reacts to investing is just as important as understanding what you're investing in. Because if you don't master your mindset, even the best investments won't save you. So, let's see how different investments can mess with your mind, and how to use that to your advantage. Control your emotions. Alright, let's talk about stocks. Stocks are like the high-stakes casino of the investing world. You pick a company you believe in, you bet your money on them, and if you're right, jackpot! You could see massive returns that can turn a small investment into life-changing wealth. And this is a big but, if you're wrong, you could lose big too. And that's the emotional roller coaster that comes with stocks. When the market is going up, you feel like a genius. You're checking your portfolio every 5 seconds, you're telling all your friends about your stock picks, and you're already planning your early retirement. That's FOMO, fear of missing out, in full effect. But when the market drops, and it will drop, that's when the panic sets in. You start questioning everything, doubting yourself, and wondering if you should sell before you lose it all. So the psychological key to stocks? Discipline. You need to be able to control your emotions, stick to your strategy, and tune out the noise. If you can do that, stocks can be incredibly rewarding. But if you can't handle the stress, this might not be where you put most of your money. Next up, let's talk about mutual funds. Think of mutual funds like hiring a personal chef instead of cooking for yourself. You're paying someone else, a fund manager, to pick and choose investments for you. Now, on the surface, this sounds pretty good, right? You don't need to be an expert. You don't need to spend hours researching. You just hand over your money and let the pros handle it. That's the appeal of mutual funds. They're designed for hands-off investors. And because mutual funds typically invest in a basket of different stocks or bonds, they offer instant diversification. That means your risk is spread out, which can be a good thing for your portfolio and your peace of mind. But here's the catch. You're paying for that convenience, and sometimes you're paying a lot. Mutual funds come with fees, and those fees can eat into your returns over time. Plus, you're giving up control. You don't get to pick and choose the individual investments, which can be frustrating if you have specific companies or sectors you believe in. So, psychologically, mutual funds can be great for peace of mind. But they come at a cost. You're paying for convenience and diversification, and you're trusting someone else with your money. If you're someone who likes to be in the driver's seat, this might not be the best fit for you. Now let's talk about what I call the smart investor's secret weapon. ETFs, or exchange-traded funds. ETFs are like the cheat code of investing. They combine the best parts of stocks and mutual funds, giving you the flexibility to build a diversified portfolio without the high fees. Think of ETFs like this. Imagine being able to buy a single basket of stocks that tracks a specific market index, like the S&P 500. That's what an ETF allows you to do. You get exposure to hundreds of companies with just one investment. And the best part? ETFs trade just like stocks. You can buy and sell them throughout the trading day, giving you more control and flexibility than mutual funds. Plus, their fees are significantly lower, which means more money stays in your pocket. Now, ETFs do still come with risk, just like any other investment. But because they're so diversified, they can help smooth out the ups and downs of the market, which can be a huge psychological advantage. You're not going to see those massive overnight gains that you might see with individual stocks, but you're also not going to experience those gut-wrenching drops that keep you up at night. It's about finding that balance between risk and reward. So, here's the million-dollar question. Where should you put more of your money? Well, like most things in personal finance, it depends. If you thrive on control, you love researching companies, and you're comfortable with higher risk, then putting more money into individual stocks might be the right move for you. Just remember, with great power comes great responsibility. You need to be honest with yourself about your risk tolerance and your ability to handle the stress. If you prefer a more passive approach, you like the idea of professional management, and you're okay with potentially higher fees, then leaning more towards mutual funds could be a good fit. Just make sure you're choosing funds with a solid track record and reasonable expense ratios. And if you want the best of both worlds, low fees, diversification, flexibility, and control, then ETFs are the sweet spot. You get to be in the driver's seat of your portfolio, but you're not doing all the heavy lifting yourself. But here's the thing, you don't have to choose just one. In fact, the most successful investors I know use a mix of all three. Alright, now I want to hear from you. Where do you put more of your money? Are you a risk taker with stocks, a chill investor with mutual funds, or a balanced strategist with ETFs? Drop a comment below and let me know. And hey, if you found this video helpful, and you want more investing secrets, make sure you smash that like button and subscribe to Penny to Millions, so you don't miss the next video. Trust me, you don't want to be that friend who's kicking themselves a year from now. See you in the next one.